Hey guys, my name is Alex. Welcome to the channel. In today's video, we are going to be going over this gold trade that could have doubled your money if you watched our previous video on this channel right here. Gold futures prediction May 2021 here. This trade we clearly outlined how and why we were going to be shorting gold despite the popular opinion that gold is actually going to skyrocket here when we get the inflation data tomorrow, which is the CPI data here. 8:30 in the morning. Okay, so what I actually want to do in this video is not only break down this trade, but debunk a common myth that a lot of people believe, which is if inflation is rising, surely gold is going to go higher. So that's what a lot of people think, but that's not necessarily true. So if you want to find out the truth, stick around because in this video, I'll explain it to you. Let's get started. So anybody could have doubled their money on this trade today by shorting the gold futures, just like we said to do in this video. Now, maybe you're a little confused on where to enter and where to exit, okay? I'm actually going to break that down step by step and show you how you could have done this today. So before we begin, guys, I called it in the last video. Didn't I say 99% of people aren't going to take this? Now, there's a lot of reasons that could be. It could be lack of education. Maybe you're just not confident enough, and that's why I'm making this video to help you so that way next time you don't miss out on a chance to literally double your money on free advice like this in this video. You see what I'm saying? So to answer the question on how you could have made a profit and specifically doubled your money on this trade, guys, you should first understand that on this channel we specialize in trading weekly options. Now gold is special. Why? Because you actually have the opportunity to trade the futures contracts on this. Now we're not currently in this trade. We've closed our positions. We sent out the message to our WhatsApp group that is not worth the risk currently. Okay, we collected profits here on the way down and we're out. Okay, that being said, there's still potential here coming into tomorrow, but we're just going to be patient. We're not going to trade this overnight, but that is the benefit to trading futures contracts. You can trade these anytime during the day. So for example, if you decided to trade GLD or GDX instead, right, the gold miners, it's after hours right now. You can't buy contracts on these right now, whereas gold futures, you can actually buy contracts right now after hours if you really wanted to. Okay, so once again, you're trying to determine your entry point on this trade and what gives you high conviction to take it. Okay, well, we obviously went over this important chart pattern and momentum breakdown that you often see after a major run-up. Now, specifically here, what you're seeing is a triple top formation with a head and shoulders. Okay, so the way you would have known to enter here for this magnificent drop here, okay, was understanding that we rose to the price of the right shoulder on lower volume. Okay, so if we teach this in depth in our charts training, but basically you can see here in the left shoulder you have a huge amount of buy volume, but in the right shoulder, look at the volume decrease. You can see it's much less in relation to the left shoulder, which means once again it's a further confirmation of a momentum slowdown here at the peak of gold. So would you know that when you're up here near this level, near this 1844 level, right, you have very limited upside potential and a lot of downside potential, which is the exact trades you want to be taking because they're highly favorable from a risk to reward perspective, meaning if you're wrong, you lose a little bit of money, you cut a loss if it maybe gets to 1846, 1847, but if you're right, look at this, you get a 20-point move to the downside. So boom, that's how you know to enter. You know to enter. Why? Because you're minimizing your risk to the upside while maximizing your gain potential to the downside. Right, so you are risking $3 of upside potential to gain $23 to the downside. You do the math, that's a 1-to-4 ratio, meaning that out of 4 trades, if you get just one of these trades right, pretty much you're going to come out break even, okay? Now, that's a oversimplified way of thinking about it. A lot of people try to break it down and act of it as if it's that simple, but trading's really not that simple, guys, okay? There's emotions that come into play. You start to doubt yourself. You start to question yourself. Sometimes you don't exit at the perfect time, okay? But now I'm actually going to show you how you could have exited at the perfect time. So I'm not sure if you guys are familiar with the ATR indicator. Now, look, I know indicators get a bad rep a lot of times, Because the truth is, no indicator is going to change your trading. No indicator is going to give you the keys to success, but indicators are going to be supplemental to your trading success if you know how to implement them correctly. And so after nailing the trade and after identifying the proper trade setup, only then is an indicator actually going to be helpful. So in this case, the ATR indicator comes into play, and this is a mathematical measure of the average range of a stock, equity, or commodity. Okay, and so in this case, gold has an average true range of 24 points, meaning from the high of day to the low of day, the range is usually 24 points, and that's just an average, right? So give or take some points, or some days it can be a really slow day and you might only get half of that range, but on average, right? This is the range of gold lately, is about 24 points. So check this out, guys. This is pretty sweet stuff, especially if you're new to trading and you've never utilized this indicator to nail your entries and exits. Basically what you're going to see here is you set a peak at 1841. When you see this thing is dumping off, a lot of people want to collect profits too early. So they'll see it's dropping, they collect the profit at 30% profit, okay? But little do they realize, if you think mathematically, right, use this little indicator here to supplement your trading. You're going to understand that the average range is 24 points. So if we actually go from the high of day of 1842 and come all the way down 24 points, guess what? That perfectly coincided with the bottom, guys. And look, that takes 2 extra seconds to figure out here. You just pull up this indicator on stockcharts.com, guys. So super helpful stuff. And so once again, you can see the range, right? From the high of day to the low of day, the range was what? 24 points. Now, not every day is going to be perfect like this, okay? But it's not about being perfect, right? Once again, it's about using the little tools, the little advantages you can get to supplement your trading and boost your results a little. And this indicator, right, absolutely boosted our results today. And so you can see this message I sent here. Great level to collect profits on at least a quarter of your position here at 8:20 a.m. So remember, guys, we are on Central Time. So these charts are on Eastern Time. So at 8:20 a.m., right, you see this message, 8:20 a.m. is exactly when we sent this message to start collecting profits. If you look at the time frame right here, look at this, 9:20 a.m. is literally the bottom in gold. So perfect exit here in gold, and that was a phenomenal trade. So I hope you can see now how you could have actually doubled your money on this trade. So guys, phenomenal setup. Congratulations to anyone and everyone who took advantage of this setup. So guys, now we are going to debunk a common misconception amongst people that rising inflation automatically means that gold has to rise, right? If that was the case, you would see gold running up hugely into the CPI data report that we have coming out tomorrow morning. But you can see it's doing the exact opposite. It's totally topped out and it's not going any higher right now. Why is that, right? Because once again, a lot of people think that if we have rising inflation, surely gold is going to go higher, but that's simply not true. And what people are missing, okay, what people don't realize is that rising inflation is also going to lead to a rise in treasury yields. And a rise in treasury yields is going to negatively impact gold prices. The reason being, they are inversely correlated. So when you see the treasury yield go higher, gold is going to go lower, right? So check out this, right? Look at these last months from December to April. What was gold doing? It was going lower. What was the treasury yields doing from December to April? It was going higher, right? So it's an inverse correlation here. Check this out. From April to now, gold has been going higher. From April to now, what was the treasury yields doing? It was going lower, okay? But what you're actually about to see if we get a rising inflation data report tomorrow is you're actually going to see the U.S. Treasury yield go higher. And when that happens, you're going to see gold go lower. Okay, so I hope you understand now why rising inflation doesn't always mean a rise in gold prices. Remember, we're coming off unprecedented times currently where we're literally coming off 0.5% interest rates. And so when that happens and, interest rates can only go higher, it puts gold in a very tough spot right now. That's why you've seen it down, 10% since the peak. Actually, it was down 19% at one point, right? And so despite rising inflation, despite expansion of the money supply, right, that is why gold has been unable to go higher in these last 90 days, actually since August, right? So Hopefully this makes sense to you now. If that answers your questions, guys, don't forget to drop a thumbs up on this video. And by the way, guys, if you have any questions, feel free to reach out and schedule a free 20-minute call. It is not $10,000 to call me. Once again, it's free. And I guarantee you, you will leave this call better than when you started, and you will learn a thing or two or even three. All right, so guys, thanks so much for watching. Please drop a like on the video if you haven't already. Make sure to subscribe with the notification bell on. That being said, I look forward to talking to some of you, and we will see you on the next video. Don't forget to leave me any questions you have down below, and we'll see you on the next video, guys. Thanks for watching. Bye.